Welcome back to Return My Capital. Earlier in the week, we took a look at SCHD as part of our ETF Review Series, of which I have a playlist dedicated to all of these videos that you can check out anytime. Today, we're going to continue that with DGRO, which is an ETF focused on dividend growth from iShares. If you're someone who's not necessarily looking for a high yield product, maybe you don't want the increased tax burden from a higher yield on your stock holdings because you already have a high income, or simply if you have a long time horizon on your investment portfolio, let's take a look at DGRO and see if this might be a good option for you. They recently paid out their quarterly dividend on March 29th, which was Wednesday this week, so you would have seen that reflected in your cash balance Thursday morning, or an increased shares of DGRO if you are enrolled in a DRIP, which is a dividend reinvestment plan. So let's get right into this ETF review of DGRO. Over the past year, we see that it's down just under 9%. If we kick over to the 5-year, we see it's up 47% on the nose. Looking at the 10-year, can't quite fill out this chart because it was started in June of 2014. We see trading in the 52-week range, about mid-range, from 43.67 up to 54.14. Want to focus in on this expense ratio, 0.08%. Again, especially when holding one of these ETF products for the long-term investor, that expense ratio is critical. You don't want that eating into your returns year over year. Dividend frequency, quarterly payer, exactly what you would expect from all of these major ETFs. $1.20 per year, and that represents a 2.44% yield, so almost a 2.5% payer. Again, this is an ETF focused on dividend growth, so you would expect to have a lower yield now, increase over the years, which is exactly what you want if you have a long time horizon. Almost 23 billion in assets under management, so definitely a big player. If we look at ETF grades and ratings, we see Seeking Alpha has a hold rating on it, whereas the quants have a buy rating slightly higher. The grades, this ETF grades out extremely favorably across the board, just about the highest grades on this that I've seen from any of the reviews I've done to this point, with a B plus in momentum, A plus in expense ratio, or expenses I should say, but again that expense ratio is 0.08%. You want to compare that to some of the Vanguard products of 0.05, 0.06%, same thing with SCHD when we did our previous review. Dividends, A, again, nice blend of current yield, 2.44%, being higher than the S&P 500, but also a higher growth rate, which we will see in just a minute. Risk, A minus, you'll see the holdings when we get into those, very stable, large cap companies, and liquidity, A plus. Let's kick on down to the ratings. Just on the Seeking Alpha analysts covering this, we've got 7, 4 with a buy rating, 2 with a hold, 1 with a sell. Continuing on to the returns, you want to look at the 1, 3, and 5-year returns. Simply on price returns over the 1 year, DGRO is outperforming the S&P 500 by about 3%, as we would expect that, with your stable dividend-paying companies outperforming maybe more of the speculative growth that's been beaten down over the past year. Looking at the 3-year and 5-year price returns only, DGRO is underperforming the S&P 500. Looking at total returns, or again over the 1 year, DGRO outperforming, whereas very slightly underperforming in total returns the S&P 500 over the 3-year and the 5-year, about 3%. Underperformance compared to the S&P 500 on the 3 and 5 year. Moving into the holdings breakdown, we'll see sector holdings, healthcare being in the lead with almost 20%, followed by financials, almost 18%. That may or may not be something you're interested in, having financials weighted that high, whereas healthcare, if you have a long-term time horizon, most would argue that healthcare and technology should be your highest weightings. Technology does come in third on the sector holding breakdown at 17%. So those top 3 really do make up a significant portion of this ETF. Again, that's healthcare followed by financials and technology. Next up, you've got industrials and consumer defensive at nearly 11% each, with energy at 7%, utilities at 7%, consumer cyclical at 6%, basic materials just over 2%, and communication stocks at 1.5%. Again, that's going to be your Verizons, your AT&Ts in communications. Top 10 individual holdings. You'll see Microsoft in the lead, followed by Apple. Not an uncommon top holdings there for ETFs. So Microsoft and Apple, a little bit over 3%, followed by Johnson & Johnson and Exxon, almost 3% in those. AbbVie, JP Morgan, Chevron, Pfizer, Procter & Gamble, and Home Depot rounding out the top 10. The entire ETF of DGRO, 449 holdings, almost 450. So the top 10 make up 26, almost 27% weighting for the entire fund. When we took a look at SCHD earlier this week, we saw that was a much more concentrated ETF with significantly fewer total holdings, as well as the top 10 holdings of SCHD making up a larger percentage of that. So with DGRO here, we're seeing more holdings, less focus on the top 10, and also a pretty broad spread in your sectors. So maybe a bit more of a diversified ETF than SCHD. Kicking into dividends, again, dividend yield 2.44% with an annual payout of $1.20 per share owned. 5-year dividend growth rate, your 5-year CAGR, this is going to be a critical metric on any dividend growth ETF. So we see a 10.3% 5-year CAGR. Very nice year-over-year growth there. Interestingly enough, not quite as high as SCHD on our previous review, but hard to be upset with a 10.3% growth rate in your dividend yield being paid out to you. Most people would say, when was the last time you got a year-over-year raise at work of 10%? So that's the power of dividend growth right there. Again, 8 years of dividend growth. We saw that this ETF was established 9 years ago. 30 cents on that last quarterly payout this week, which was Wednesday. Taking a look at a chart of dividend growth history here. 2014, when this fund was established, dividend payout on an annual basis was 26 cents. Kick over to 2022, $1.17. So we went from 26 cents to $1.14 in about 8 years. That is the power of dividend growth, and that's what makes these ETFs so attractive. If you are someone who enjoys receiving dividends, someone who realizes the value and importance of dividends in your total returns, especially over the long term for a long-term investor. I think that just about wraps it up for our quick snapshot review of DGRO here. Just want to say thank you again for watching this video. This is the 3rd video on my ETF review series, and there are many, many more to come in the near future here. We'll be covering broad market ETFs, thematic ETFs that seek to capture a specific theme or segment of the market, as well as sector ETFs that are focused on one of the 11 market sectors like healthcare, financials, technology, etc. So if you enjoy this type of content or feel that it may be useful for you on your investing journey over the course of your lifetime, consider liking the video and subscribing so that you don't miss future uploads. Enjoy your weekend, and let's make some money.